every time we invest, we're also trying to do things for the community. We're also we have two charities. One is I think it's a tree planting organization where like every dollar you spend gets a tree planted. And then we have a company, a charity called Bond Shams, where essentially they do these solar powered boxes that drill. They have a drill and it drills for fresh water. And so it's self-sustaining.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Vic is a multifamily investor, CRO of Viking Capital, who has raised over $100 million in private equity from high net worth individuals, doctors, and other professionals around the country who want to achieve true wealth and diversify their income. Vic, welcome to the show.
Hey, man. Sam, thank you so much for having me.
Hey, man, the pleasure's mine. There's 3 questions I ask every guest who comes on the show. In 90 seconds or less, can you tell us where you started, where you are now, and how you got there?
90 seconds or less. All right. Where I started as scared, confused, and dazed. Where I am now, figured out how to create multiple 6 and 7-figure incomes. And where I'm going is trying to up-level everyone I touch and meet in 3 different categories: health, wealth, and mindset.
Health, wealth, and mindset. Scared, confused, and dazed is not a good place to launch. How'd you get out of that?
It's living in scarcity mindset. It's living with preconceived notions of what's possible, what's not possible. And it's realizing that eventually I had to realize that, hey, I can script my own destiny. And, my biography is not my future, and it's like, it's realizing also sometimes you let go of your dreams to follow your destiny.
What does that mean? Can you expound on that?
Yeah. One of my biggest dreams when I was growing up was to be a doctor and to be specifically a cardiologist. 6 people in my family dying of heart attacks. It was something I really was near dear to me. So I studied it. I learned it. I blood, sweat, and tears it to get into it. It was super difficult. Once I finally got there, I thought the skies would part, the sun would come out, and I'd be like in a perennial rainbow. But it was actually just like, oh, now what? Or is this all there is? Or, you know what? It's not all it cracked up to be. And so then I was like, how do I maximize my profession still? And I did that. But then I was like, you know what? It's still not getting me to my ultimate place, which was, I realized I was not chasing to be a doctor or even money. I was chasing freedom. And then I was like, all right, is it financial freedom? Great, I'll go for that. Or is it time freedom? Okay, that's great too. But no, I want it all. And then I came up with this concept of sort of the 5 freedoms. And I'm always the guy that says both and versus this versus that, or, so these false choices that people have to make in life, I choose not to make them.
That's fantastic. I love that. So you became a cardiologist. How long were you active?
I practiced for about 8 years and, was able to retire by the age of 40, which is one of my goals and dreams. And I didn't retire from medicine. I just retired from cardiology, the traditional practice of it. And then I was able to pursue sort of my passion of helping people reverse disease, not just manage it. So I created this really cutting edge clinic called the Vitology Institute. And it was all because of my real estate, career. So, once you have income and cash flow and net worth outside of your main profession, it gives you the boldness to take on what we call risk and pursue your passions.
Right. Yeah. I mean, that's a lot of the cash flow quadrant idea, right? Is that once you have those consistent income coming in that you're not working for, that is coming to you, you can then focus on the things that, take you to the next level or to getting out of the rat race. Right? No, that's not how it is. It's once you exit the rat race, financially, then you can actually go and do the things that you call quote unquote risky things. So how did you get into real estate? So you're a cardiologist, and the three things you want to focus on are health, wealth, and mindset. How'd you get into real estate?
So I knew I just needed this, even before COVID, a lot of people during COVID realized, hey, whatever their career they're in, lawyer, doctor, dentist, professional, business, computers, it's not as safe as they thought it was because, COVID disrupted a lot of things.
Right.
And so it's good to have multiple streams of income, which you've done and you've done a great job with. And so I was really an advocate of that. And I was like, all right, what do I do next? Or what do I do on top of my medical profession? And then I thought about stock trading, and I specifically did not, since I didn't have that much money at the time, I thought options may be the way to go. Once you get your butt kicked in options, then I was like, all right, what's next? And then I understood real estate. It made sense to me, and I was like, all right, that's the way to go. I tried wholesaling, didn't work out. It was way too time consuming and way too much more work than return. Then I was like, all right, let's do fix and flips, but I couldn't do it in my own backyard because I live in Northern Virginia, DC, very expensive. So in 2012 I started doing it with my dad down in Atlanta, and that was successful. So we did that for about 30 of them. We did 30 fix and flips, and it was pretty cool. But I'm like, this ain't gonna retire me, this ain't gonna replace my income. So that's when I heard this guy speak. It was one of my mentors, Dave Lindahl. He spoke about buying these 100-unit complexes using other people's money and then getting paid to do that, and then rinsing, repeating, and creating an empire. I was like, wow, my jaw dropped. I was like, sign me up. But then it was all theoretical. It was all like, is that really true? Is this just some kind of like, get rich quick scheme? And then I delved into it. I looked into it. Then I did what most people don't do, which is take action, right? I read about it. I got the ebooks. I got some online course. Then I showed up to the boot camps. And then I was like, you know what? I'm going to do this no matter what. And then we partnered up with some folks. I got a buddy of mine to join me, and he's still my partner today, Ravi Gupta. And we started a company called Viking Capital in 2015. And two doctors working full time, with this dream of creating this company. And now we're at 2022, I guess. And we're on track to launch a $100 million fund. We've done 24 transactions, raise over 100 million, much more than that now, I guess. And we're on track to get to the $1 billion mark and not look back. And we're going to start adding development to our repertoire, and we're off to the races. We went from a team of 4 at the beginning of COVID to a team of 14 after COVID, or we're not after COVID yet, but we're trying to be. And so, yeah, man, it's exciting, and it's opened a ton of doors for me. And I'm still doing, things in the wellness space. I've entered the leadership and coaching and mentorship space because I'm interested in it. I'm passionate about it. I love it. And there was a need. So during COVID, a lot of doctors started reaching out to me, say, hey, I heard you're doing something different. Can you teach me? Can you show me? Can you coach me? I'm like, dude, I don't even do all that, but I can talk to you on the phone a little bit. And then they're like, okay. And I noticed I was spending hours and hours talking to these guys on the phone. I was like, dude, someone's like, you should charge for that. I was like, okay. So created a coaching program, just because of people were requesting it. So now I get to do, these 3 things I love, like, human optimization, which I consider like, living longer, sleeping better, being physically fit in your 30s, 40s, 50s, and 60s, doing all that great stuff. And the reasons why is because I want energy, man. Like, I know, Sam, to do all the big dreams you guys have, you need energy, right? And so I need energy for my kids. I need energy for my clients, for my real estate ventures, for the charities we're involved in. So yeah, and I think energy is a new currency, and energy leads to freedom, and freedom leads to happiness, I think.
Right, man. That's fantastic. What did you guys do, just as a practical point here? You guys launched this platform. Tell us a little bit more about it, like who the demographic is or the target audience is for that platform. But then what were some practical steps you took to making sure that what you were providing to those people was what they were looking for? Because I know that's not a small undertaking to launch a coaching platform. There's a lot of thought that goes into what we're going to put in the program, like how.
Yeah. So right now I have 2 coaching platforms. One is called Limitless MD, where I help literally take, sort of the 1% of doctors who are ready to take their life to that next level. They want to add alternative streams of income. They want to pivot out of medicine. They want to add, they want to pursue other big dreams, that are layered on top of their medical dreams, or they just want to take their medical profession to that next level and stop being an operator and becoming an owner. Right. And how to, what I call LGS, leverage, growth, and scale. And so those are what we show people how to do. And so I started with just one-on-one coaching, and now we're sort of opening up a sort of a group coaching program, and then eventually we're building out some modules and platforms and things. But it's like each coaching session is essentially different. I'm like figuring out, hey, what does Sam need? Sam's right here. He's at step point A. He wants to go to point B. There's some head trash in the way that's preventing that. And number two, there's either some contacts, some connections, some thoughts, some ideas. Something is missing to bridge that gap. And so the goal is let's do that. And the goal is to compress decades into days, right? Let's compress that so where we can collapse time and literally get Sam his results in 3 months instead of 3 years.
Right.
And we've been able to consistently do that for that. And then I've been now doing that on the real estate side. So look, it's one thing for me and you to crush in real estate, which me and you are doing a great job of, but it's even better to help others get there. And so like, I'm trying to figure out, hey, look, I've created this company. You can too. You don't need me. You don't need, I mean, I would love for you to invest with me. I'd love for it. It's great. And we have a great track record. But if you want to do this on your own, let me show you how to do that too. So we've done that. And, we've had these doctors that had no clue how to invest. Like they don't even own a single family home. And within like 6 to 9 months, they've bought like 110 unit property, a $10 million deal. It's crazy. And it blows my mind when I think about it, but it's exciting too. And it's all about this abundance mindset. Dude, if you own 10 properties, I can still own 10 properties and we'll make a dent in the universe. It's also like you invest in my deals, great. And you invest in my friends' deals, that's also good. Like there's enough capital everywhere, there's enough deals everywhere, there's enough syndicators everywhere. There's, and so I'm like, help everyone you can, each one teach one, bring everyone up and let's go.
Man, that's fantastic. That's really, really cool what you're doing with that. And I think it was, there was somebody came on the show recently, another medical doctor, and he was just lamenting the absence of financial education inside of the medical space. He goes, we come out, we spend all these years in school, and we have no idea what we're doing with our finances or even how to invest or invest wisely. So I think it's really cool that you're taking people and teaching them practical steps on how to get that, how to get out of that rat race and also really build something cool for themselves. Talk to us about your fund. I know you guys have raised a ton of capital. I mean, raising $100 million that's a significant amount of work. So maybe talk to us first of all about some of the practical things that you did on the capital raise side to raise that much money. And then, talk to us about why you guys are going to a fund.
So, yeah, I mean, first of all, I think raising capital is the number one superpower that a entrepreneur must have, whether you're in real estate, whether you're in Silicon Valley, whether you're a biotech startup, whatever you are, you need to be able to do that, because otherwise, if you're not well capitalized, you will fail.
Right.
And so we started our career similar years where we were helping other folks, get their deals done. And just because we wanted to learn, we wanted to understand the situation. But at some point we're like, you know what, we can do this. And then we started just doing our own projects. And, the circle is very small at the beginning. It's concentric and it goes out, right? It's like only people, then it's people, you sort of know. And then it's people 2 degrees of separation. And then it's people like you've never even heard of that somehow know you and then they're ready to go with you. So that's what we've done. I'm going to go geeked out on your people because I want to add value. So it's 5063B is friends and family. Excuse me. That's how we got started. But after that, we made the transition last year to go to what we call 5063C, which is sort of the crowdfunding model. And it requires us to verify third-party wise that these people are truly accredited investors, which, I know your audience knows that definition, but 200 as a single, 300 as a couple, or net worth of $1 million is usually the typical one we use. But what happens is you need to have marketing dollars ready to go at your disposal to really get the benefit of 563C, because there's a cost you have to pay. The cost is you have to really verify. There's more onerous paperwork, and the SEC really looks down upon you very tightly because you're doing essentially a public offering in a way. So we bit that bullet, and it was a good bullet to bite because we just exploded our social media presence and just our thought leadership platform. We launched a podcast. We started doing newsletters. really reached out to a ton of people. We started, being on other people's podcasts and just sharing what we do. We have public webinars on our projects. So it allowed us to get a bigger audience, and so I don't recommend it for people unless they're maybe at least 5 to 7 deals in, and then I think they're ready to sort of explode, because it's good to really cultivate that warm network, because those are the people that, they'll stand by you. They're not doing it because the deal, they're doing it because they trust you. And those are the people you want to get on the boat first. And then at some point, you're going to outgrow that. And then you also want to get other people as well. So that's what we did. And then there's a point where, there's sort of this like, funds are sort of the vogue thing to do right now. It seems to be, at least in a lot of different people's circles and multifamily circles. And you'll notice that even though multifamily is a huge space, it's really not. And it's really a small circle, small group. And, there's some private syndicators. There's definitely a good amount of institutional people. And, there's some key brokers and networks out there. And pretty soon, if you've been in it about 3 to 5 years, you'll pretty much start knowing you'll start hearing the same names. But what I've noticed is so many people were doing funds, and they were doing funds in fields that they were not necessarily expertise in, right? Like they've grown up as multifamily and then they launch a hotel fund, or they've done multifamily and then they do self-storage on the side. I'm like, oh, okay. So what we've done is, it's very easy to get shiny object syndrome, or, hey, it's really competitive in this market. Maybe let's diversify out. But we've stayed true to multifamily and we've just doubled down on it. So that's why we're like, we're going to be known for one thing, and that's multifamily, and become really experts at it. And I think that focus and that sharpening of the sword and expertise creation yields trust in investors. And so what happened was, our one-off single asset syndications were overfilling literally within, a day, 2 days, a week, 2 weeks. We're overfunding, and there would be anger because they're like, hey, I couldn't get into the project. And so when that happens consistently, that's a good sign that, hey, maybe the fund model may work for you, because then, you can have a bigger pool of capital coming in, and you can then deploy that to buy, a group of assets. And the other thing is, I think a fund model works if you're not solely focused on just one geographic market. We were really an Atlanta-based firm when in our younger years, but as we've grown, we've, right now, I can share, with your audience, Sam. We have deals in Dallas, Austin. We just got a deal in San Antonio, Houston. We have Carolinas and Florida. We're looking actively and aggressively, and we've competed, and we've just narrowly lost a few. We have a ton of deals in Atlanta, DC. We have something in Nashville and Indiana. So I mean, we're trying to be more of a national player now.
Right, man, and you definitely are. And I think one of the other advantages of a fund is that it allows you have the money ready to go. So there's not that like, oh, hey, and then not that you guys were facing this trouble of will we get it raised, but I think there's something probably from a seller's perspective where you can say, hey, look, we've got 20 million in equity or whatever it is in the fund right now, ready to deploy. We can take this deal down. I mean, I think it would probably help, just from a credibility standpoint as well. But again,
yeah, less credibility and more to compete, because there's so many groups out there with capital now. Yeah. So it's really very few groups don't, they don't, it's not, I don't hear too many of people where, oh, they couldn't raise the capital, the deal fell through. It's more like, maybe some lending issues or whatever, or, some other issues. So everyone has money, everyone's ready to go, everyone's ready to pay what you're asking. So right now it's a great time to be a seller, and it's a tough time to be a buyer, but because the market's in this weird phase where once you buy, you can still get a ton of appreciation in a short amount of time. I would say the green light is still there to buy, but just be cautious in what you're buying. And then obviously get really good debt. And then if you're getting floating debt, put a what I call a cap on it, so it protects you against the interest rate hikes, which are going to happen soon. Yep. And yeah, I think that's the way to sort of mitigate risk.
Yeah. Any fear the interest rate hikes will drive cap rates up?
Yeah, I mean, they may drive cap rates up, but and prices will come down a touch. But because interest rates have gone up and cap rates have come, prices have gone on down, I think the net returns are going to be the same.
Right. Yeah, that's interesting, man. This has been absolutely fantastic. I love just the way you put it out at the very beginning. Health, wealth, and mindset are the three the three things that you really want to focus on. I don't know, we've had much time. You've talked about a little bit. You've mentioned head trash. You've mentioned getting your head right as you bring people in. What are some of those things? Maybe we can spend a few minutes here just talking about some of the things that you found that you could help people get over. What are some of the common things you say, hey, this is how.
So let's do this. Let's do like a couple of health and wellness tips to like up level their, and the reason is you want to be your optimum self health wise so you can really crush real estate in 2022. And so this is, try to get up the same time and go to sleep at the same time consistently. Your body loves that circadian rhythm. When you're working in productivity, there's something called the old trading rhythm where you work for like 90 minutes in a row, take a 10 or 15-minute break, and then work for 90 minutes. No distractions, phone on, do not disturb, airplane mode. Though if you can do 2 or 3 90-minute windows where you're like on track, literally that's better than you working 8 hours and you're sort of, half, half giving it your full. So that's some strategy. I drink 3 liters of water a day to stay super hydrated. There's a super supplement I recommend for pretty much 99% of my clients. It's called Athletic Greens, and it's something I've been taking for the last 4 years. Phenomenal, sort of one-stop shop for a supplement. And then I use this thing called the Aura Ring, OURA ring, and it's sort of a nice biohacking tool, and track your sleep, your readiness score, your stress levels, your activity levels, your heart rate. It can even predict whether you're going to get COVID or sickness. So it's pretty cool. In terms of mindset and productivity, the best book that I've read that many people don't even know about is called The Perfect Week Formula by Craig Ballantyne, which is one of my coaches and friends. And it is literally going to, everyone talks about morning routines. He debunks the myth that morning routines are going to help you. In fact, he says the first thing you should do in the morning is something called NUI time, not urgent, important time, meaning you're doing things that are going to move the needle forward for your top 10 goals. Right. And then you do your workouts, your routines, or whatever you're supposed to do. Most people use workouts and routines and whatever meditation and journaling as sort of a perverse way of procrastinating on what they need to do in life.
Man, that's tough. That's tough love right there. I like the way you put that. It's funny you mentioned that because it used to be, for me, I would get up and eat breakfast, do my morning routine, then I'd go work out, and then I'd come back and I'd start work at 8 or 8:30, whatever it was, and I'd find that my best window, like you said, the NUI, not urgent, important, it was now harder that I'd use my good brain space for, like you said, planning and then working out and then going. I'd kind of burned that window of really prime thinking time. And so I've actually switched that up. You'll find me at my desk quite oftentimes at 4 a.m., 4:15. I'm sitting.
Boom. That's it, man.
Yeah. I'm 4 to 6 a.m. is the best window. I mean, and that's, again, phone's off. Nobody's calling you, and I can think and do the NUI. I just haven't heard it put like that. So thanks for giving a little, a little more affirmation to what it is I've recently been starting doing. So I like that. That's fantastic. Let's jump here, Vikram, into the final 4 questions, if you don't mind. What is one tool or resource you find you can't live without?
There's a thing I use called the Productivity Planner. It's by a company called Intelligent Change. And, I've looked at tons of planners out there, but I like this one. It's really simple. It's all science-based. It's on, the products, time productivity. And it's I think it's $20 on Amazon. Really cool tool. And it forces you to just do less, but do bigger things in that time. So it's like, what are your top 15 things you need to do for the week? And then it only allows you to do one major thing per day. But that thing is like literally like the frog methodology.
Got it. That's fantastic. If you could help our listeners avoid just one mistake in real estate, what would it be, and how would you avoid it?
Don't do it on your own. Get expert advice. Get a partner. Multifamily team sport, and then you can do trial and error, but it's very expensive. I would say pay to collapse time.
Right. Yeah.
Expert advice.
Absolutely. Love that. When it comes to investing in the world, what's one thing you're doing right now to make the world a better place?
It's called impact investing. So every time we invest, we're also trying to do things for the community. We're also, we have 2 charities. One is, I think it's a tree, build a tree planting organization where like every dollar you spend gets a tree planted. And then we have a company, a charity called Bond Shams, where essentially they do these solar powered boxes that drill. They have a drill and it drills for fresh water, and so it's self-sustaining. So I think the box costs about $5K, and once you get the box deployed in a village somewhere in the country, somewhere in the world, it literally provides 25 years of water for a village. And so we're like launching a bunch of those all over the place.
Wow, that's amazing. What was that? What was that product called?
It's called the charity is called Bond Shams, BONDESHAMS, and it's really a hybrid between solar and water projects. And literally, the cool thing is I love it is sustainability. Invest in it once, and it provides support for 25 years.
Right, man, that's fantastic. Yeah, the water needs around the world are staggering. How many people live without access to clean water? So that's fantastic. Vic, if our listeners want to get in touch with you or learn more about you, what is the best way to do that?
Yeah, absolutely. VikramRaya.com is my main website. And if you want to learn about my real estate company, there's a link there. And then if you want to connect with me directly, I have a URL. So linkwithvik.com, linkwithvik.com gets me directly to my LinkedIn.
Fantastic. Vic, thank you so much for your time today. I do appreciate it.
Thanks, Sam.